Welcome to the current federal tax developments brought to you by the Loscalzo Institute and your state society of CPAs. This week, we're going to take a look at a number of developments coming up to the area of federal taxes, including a case where an employee ends up having to pay tax on the amount of a plan loan when her employer made a mistake and failed to withhold her payments when she went on leave. We have an issue here with legal expenses. We have legal expenses, the determination of what could be deductible there, where the expense was determined not to originate with the S corporation, leaving the shareholder with the deduction only on Schedule A. Not a good place. We'll talk about whether a cash basis landfill operator will be allowed to deduct his cleanup costs currently, the costs that would come when he later shuts down the landfill. And finally, we'll discuss an IRS email that takes a look at the limitations on your use of Form 941X to correct issues on prior year's payroll tax reports. Now, it's been a couple of, we're in the summer here, and obviously things are nice and warm. And I'm going to be heading out around the country now over the next few weeks. I have travels going all over the place coming up here, starting out in New York City, and then moving through Montana, New Mexico, and then back here to Arizona. And wanted to tell you about some of the upcoming courses we do have coming available here in the various state societies. The first ones that I want to talk about here that are coming up, you might want to sign up for is we have a set of 3 courses coming up here, and I'll be presenting at the Arizona Society of CPAs offices. On the 9th of August, I'll be doing fringe benefits. And I wanted to mention, I am going to be covering in that course the Arizona earned paid sick time issue that's caused issues for a lot of employers. So that'll be a discussion. You want to have a discussion on that. We'll definitely be covering that in the course that day. On the 9th, I'll be talking about preparing Form 1041. We'll have a discussion of Arizona's Uniform Principal and Income Act, because you have to understand that. By the way, you have to understand any state's Uniform Principal and Income Act in order to prepare 1041s. Finally, on August 10th, we'll talk about ethics and quality control and tax practice. That is the course that qualifies as the 8-hour version, but it qualifies for the 4-hour Arizona ethics. Coming up later in the month of August in the Seattle area, Don Cochran will be handling a pair of courses. He'll talk about on August the 21st, estate and gift taxation, planning and compliance, which obviously in the state of Washington, because of your state level estate tax, is more significant. And we'll also talk on August the 25th, he'll talk about multi-state taxation of businesses. With everything going on in Nexus, obviously this is becoming a more significant and more troublesome area. Again, those sessions will be held at the Washington Society of CPAs offices in Bellevue in the Seattle area. So let's go ahead and get started here, and let's take a look at first, our first up case this week is the case of Frias versus Commissioner. This is Tax Court Memorandum Decision 2017-139. The case was issued by, the opinion was released by the tax court on the 11th of July. In this particular case, Ms. Frias took a loan from her 401k plan just prior to going on maternity leave. So she took her loan out. She took her loan out actually 3 days before she started her maternity leave. She borrowed $40,000 from the plan. Under the terms of the plan, any amounts, the payments that were due, and in this case, her payments are going to be $341.79 a week, or let's say a payroll, would come out of her payroll check. She took leave, and obviously under the Family Medical Leave Act, you're required to offer leave for maternity issues. However, doesn't necessarily have to be paid. In this case, though, Ms. Frias had some leave, which she could use, some paid leave, and she used some of that paid leave. Here's where the problem came in. The employer paid her her paid leave, but failed to withhold the required payments. So on the paychecks that she got while she was on maternity leave, the 401k payments were not deducted. Now, Ms. Frias didn't notice this problem. Can't imagine she had nothing more to think about than take a look at payroll checks at this point. But hey, nevertheless, she doesn't notice the issue. But when she comes back to work, so she returns basically from her maternity leave on October the 12th of 2012. And so she's been gone now for just a little less than 3 months. And she's informed, oops, we forgot to take out the money to pay the 401k loans. Well, she realizes this is a problem. So she basically scrapes together $500 to make a payment directly to the loan, plus agrees to have an extra $100 added to her payments all the way through the following July, at which point then she'll go back to the regular payment schedule. Her employer agrees to that. The plan administrator accepts the payments, credits them to the loan. Everything seems fine, except at the end of the year. Even though she has now taken action, at the end of the year, what ends up happening is the plan administrator, who, by the way, is independent of the employer in this case, issues a Form 1099-R to her. They issue the 1099-R because by failing to make those payments, and then by failing, according to the terms of the loan, she had until the end of the following month to make up any shortfall. So she first missed a payment on August the 10th. That meant that she had to get that payment in order to come up, and make good on terms of the loan. She had to have that payment back in by September 30th. She did not do that. Therefore, the administrator reasoned that the entire balance of the loan plus the accrued interest was considered to be distributable to Ms. Frias at that time, and Ms. Frias essentially gets a 1099-R for that amount. Now, as you might guess, Ms. Frias, of course, in this case, they posted the 1099-R on the website, but it's not clear whether we know she ever accessed this. It's not clear whether she was ever notified it was there. And in any event, as the court points out, she had little reason to believe there's a problem because she had taken care of this. She had talked to them. She had gotten the payments restarted, so everything should be fine. She didn't know why she should be looking for a 1099-R, so she missed it. Of course, the IRS didn't miss it. The IRS sends out, the CP 2000. We start the whole process, and eventually she ends up in the tax court. Now, she claims that, wait, this really isn't right. Why in the world should I have to pay tax on this amount? Because, hey, look, I actually paid back. She actually had the entire loan paid off by the time she'd up in tax court. So this is just wholly unfair. Well, unfair or not, the law does provide, the regulations do, that once you violate the terms of the loan and you don't make it up during, your period to make up the balance, you basically have a distribution. By the way, it doesn't get you out of repaying the loan because that's an ERISA plan problem. So the issue is she ends up repaying the loan. That's fine, but she still has to pay tax on this amount. Well, she said, okay, maybe that's the case, but there is an exception. That because the first payment, she was on a leave of absence when it was there. And because if she was on a leave of absence without pay under regulation 1.72P-1, question and answer number 9A, if you want to go look for it, if you're on unpaid leave, then it is okay for the loan payment period to be suspended while you're on unpaid leave. That doesn't violate the requirements of the reg that we have to have equal repayment requirements over the term of the loan. Well, the court said there's only one problem. You got paid. She said, but but it was FMLA leave, and that doesn't have to be paid, and I'm allowed to take my pay for it. And the court said, wait. First thing is, it's not really clear anybody ever applied for FMLA leave. Number two, even if you did, all the law says is, did you get pay? And if you do decide to take your vacation pay or take your sick pay as part of that time period, it would still be considered pay from which the loan could be paid. The exception is only if you're not paid or the payment is less than the amount needed to pay the loan. Neither one of those were true. The paychecks she got were all greater than the $300 and some she had to pay. So for that reason, sorry, this counts. So the problem is, despite the fact that the error was the employer's error, the employee ends up having to make good for the payment of the tax and interest on the loan. The court did allow her not to pay penalties, stating that there was no reason why she should have been aware that there was a 1099-R out there. It was like that considered to be an unusual situation. She had reason to believe that everything had been taken care of. What this really tells us, though, and probably, to be honest, the situation that this employer has, is, be careful here. And first thing is make sure you communicate with your plan administrator very carefully about issues if you have loans. Loans are dangerous. Don't just assume that you as the employer can waive the problem, because the administrator is not. The administrator has to follow the law. But also, make sure that if you're an administrator, be kind of nice to make sure you informed everybody very openly that this was going to be a taxable transaction. There was no fix out of this. It's just one thing. Be very, very careful with loans from qualified plans. While they are allowed, obviously the key point of these plans is meant to be the employee's retirement, not being able to provide a place to provide loans. So if you do it, you got to be very, very careful about how you work with them. Next up, we're going to go to the case of Dulick versus Commissioner. This was a tax court summary opinion, 2017-51, issued on the 14th of July. And this one deals with the issue that we run into whenever we have legal fees of the concept of origin of the claim. The origin of the claim issue takes a look, your clients probably believe, although mine seem to, that legal fees are automatically deductible. As you should be aware, nothing in the Internal Revenue Code says you automatically get a deduction for legal fees. Rather, you have to qualify those fees under another provision. But even more to the point, you also are restricted to only being able to claim those fees as related to whatever caused that legal action to start. The concept being the origin of the claim. What was the nature of the claim that started the legal dispute? And what activity did that originate from? In this particular case, we have a taxpayer who is negotiating a severance agreement from his employer. Now, he was trying to get out. He was okay with what they were offering, except he was trying to get them to remove a reference to a non-compete agreement and various issues about basically trade secrets that he was not allowed to reveal from his employer. He wanted to get rid of that. It went back many years, and it related to a predecessor to the employer that he was negotiating this agreement with. He was trying to get out of that and ended up paying, at the end of the day, $26,781 worth of legal fees with regard to this arrangement. Now, that's all well and good, but what becomes interesting is where he tried to deduct it. Because he said he was doing this, he said, I was only negotiating this. I would not have disputed the severance agreement at all, except I was trying to get rid of that non-compete agreement in order to help my S corporation business, which I was starting. So I should be able to deduct the legal fees on the S corporation, because really that's who benefited from these legal expenditures. Well, the court said that's all well and good, sir, but that's not really the issue. The problem in this case for this taxpayer was the claim originated with his position as an employee of the other company. Because it originated in his employment, that means this becomes employee business expenses. Now, as you may guess, that could be a major problem. The obvious problem is that's only going to be deductible on a Form 2106, which means you have to itemize. And oh, by the way, it's a miscellaneous itemized deduction. So that means we're going to get the 2% haircut, and it's not going to be deductible for alternative minimum tax purposes. So for all of those reasons, his benefit, if he gets any, and he may not get any from the legal fees if they're going to be down below the line, but his benefit is much reduced down there. This is important because remember that this is not a case where, it was just enough to say, did it benefit the S? Probably it did benefit the S Corp, but that's not the issue. For legal fees, you always have to go back and say, where did the issue from which the claim is arising start from? Not necessarily, why are we incurring the fees, which is a somewhat different question. Why we are incurring the fees is more of an issue that you have to deal with if we're going to talk about whether it'll be deductible at all. But for where you might be able to deduct it, that's when the origin issue becomes significant. In this case, the claim originated not from the business, and the fact that he may be totally correct in saying he would not have incurred these fees except for the fact he was starting a new business, that's irrelevant. The claim related to his time as employee, therefore the deduction is a Schedule A deduction. Now let's go on and talk about a case. That was kind of a bad news case for a taxpayer. Let's go to the case of Gregory versus Commissioner, 149 TC number 2. And this case is a good news case for the taxpayer. This is the case where a taxpayer on the cash basis effectively gets to accrue an expense. In this case, Mr. Gregory was operating a landfill. Landfill, so basically, the garbage and everything is going into the landfill. And, we fill up this landfill, we process things, but eventually the landfill is going to fill up and we're going to have to shut it down. And there's going to be various treatments and decommissioning costs that are incurred when doing so. Now, those costs are fairly significant and they are incurred after the landfill is done generating income. So Congress, and there was an issue though, because the IRS argued that this didn't meet, and they were arguing with regard to accrual basis taxpayers, this did not meet the standard accrual test under 451, that you couldn't accrue those expenses until such time as you met all the standard 451 tests, which meant that even an accrual basis taxpayer would have had to have deducted those only after they shut down the landfill. Obviously, if you don't have another landfill you're operating, that may not be very useful to you to suddenly get deductions, years after you've incurred the income. So Congress enacted section 448 of the code. Section 448 of the code provided that that a taxpayer who is, I should say 468 of the code, get that very clearly, a taxpayer who is electing, a taxpayer who is running a landfill can elect to deduct on a current basis a reasonable portion of the expected cleanup costs to be incurred when the landfill is shut down. Now, the IRS had no question in this case about the computation of the costs to shut down the landfill and how much of that would reasonably be allocable to the year in question if a deduction was allowed. But the IRS said, look, Congress was worried about the fact that the standard accrual basis test failed on this one. So this election really is only open to accrual basis taxpayers. That is, Congress clearly only intended this to be accrual basis. The tax court said, well, IRS, let's talk to you a little bit about what we're going to talk, how we interpret statutes. The tax court said, very simple rule here. If the plain language of a statute is clear, then we really don't care whether Congress intended to do it or not. In this case, the tax court said, let's look at the plain language of the statute. The statute merely says a taxpayer who files the proper election may claim a deduction of basically the close down costs of this landfill. So the IRS, tax court says, look, this says taxpayer in general. They then look to definitions of taxpayers. This is under 7701 is where we have what the tax court referred to as a dictionary. 7701 are the general definitions that apply under the code unless they're overridden. The tax court noted that any party that pays taxes is a taxpayer. Now, in this case, Mr. Gregory was a shareholder of an S corporation, so the S corporation actually made the election. The tax court said, well, the S corporation doesn't pay income tax, but it is liable for other taxes like payroll taxes. So we're still agreeable in S corporation as a taxpayer. And the court said, because of that, and Congress put no restriction on the word taxpayer here, we have to believe everybody can do it. But the IRS says, well, but there's all this congressional record. They talked about the Blue Book. The tax court said, first, we don't even worry about what Congress claimed they were passing or what the congressional record says or what legislative history says. If the language is clear, Congress, we're going to assume at the end of the day what Congress actually enacted is what they meant, regardless of what they might have said ahead of time. They said, secondly, the court pointed out, the Blue Book can never be considered to tell us what Congress was thinking when they passed the law because it didn't influence. No congressman went and read the Blue Book before passing a law because the Blue Book isn't put together until after the law is passed. So the Blue Book doesn't count. So the tax court said, IRS, the plain language of this section allows for a cash basis taxpayer to deduct it. Therefore, we're going to allow a deduction for a cash basis taxpayer. Now, this is important because in many cases, you may see things like today. You're probably going to hear over the next week, the Senate's back to playing with the health care bill again. You may hear various discussions. You may read in newspapers. You may see senators on TV telling you what they mean by positions they're going to put in this bill that may be tax related. None of that is relevant if the plain language of what they actually pass doesn't agree with what they said on that news broadcast or what you read in the Wall Street Journal or any of those things. Remember, plain language always overcomes. Plain language in the code overcomes everything except the U.S. Constitution effectively. So you need to be very careful when interpreting a statute. Watch, and this is just a warning for everybody, not just the IRS. Is it likely Congress intended this to be accrual basis? Yeah, probably. Does it matter? No, because they forgot to word the law in such a way that limited it to accrual basis taxpayers. Finally, we're going to take a look at an email the IRS issued, a Chief Counsel email 2017-27008, that was released by the service on July 7th. Now, this deals with the question of the Form 941X. 941X, you may be aware, is used in certain situations to correct payroll tax filings that you previously made. You had a previous 941. We had issues. So, I finished my first quarter 941. You now are working out second quarter 941s, and you notice there was a problem with the first quarter one. So you can use a 941X to help you fix the problem back with that first quarter 941. However, there are restrictions on using Form 941X for federal income tax withholdings once you get outside the year in question. And what the 941X instructions tell you is that generally, you may correct federal income tax withholding errors only if you discover the errors in the same calendar year you paid the wages. In addition, for an overcollection, you may correct federal income tax withholdings only if you also repaid or reimbursed the employees in the same year. For prior years, and this is what's important, you may only correct administrative errors to federal income tax withholdings. That is, errors in which the amounts reported in Form 941, line 3 doesn't agree with the amount you withheld from an employee's wages, and errors for which Section 3509 rates apply. Now, the one we're going to worry about here is that first administrative error. That is, errors in which the amount reported on Form 941, line 3 doesn't agree with the amount you withheld from an employee's wages. A lot of employers are filing Form 941X with the IRS that is trying to correct an issue they find in a prior year and even asking for a refund. Now, what they said, in some cases, the employer incorrectly calculated the amount of federal tax paid in the prior year from behalf of the employee rather than deducting from the employee's pay, which resulted in additional wages subject to tax. So, we end up paying too much. We basically have a different amount in there. So, we made an error. It was not an error that was totally wrong. So basically, we didn't have an error where we have the amounts on the 941 are not the same as what were withheld from the employee's paycheck. But basically we're saying the amounts we withheld from the employee's paycheck were actually in error, and we want to now correct that, and we're in a later year. And many taxpayers were labeling that on line 24 of Form 941X as an administrative error and claiming it. Claimed the error was administrative errors. The IRS, the employee who asked for this guidance, was basically saying, I don't think those are administrative errors, am I right? And the email says, yeah, you're right. Administrative errors do not include errors such as withholding the wrong amount. Fundamentally, as the email tells us, they only include transposition or basic math errors, such as addition or subtraction, multiplication computations, in which the amount reported on Form 941 doesn't agree with the amount withheld from employees' wages. If that's true, they're administrative errors. An employer may correct non-administrative errors only in the same tax year. So employers cannot correct non-administrative errors after the end of the year in question. Now, the IRS does go on and tell us, they gave us examples of a few non-administrative errors. These are ones you can't correct after the end of the year. First, if you use the wrong income tax withholding table in publication 15. You can't use a 941X you're filing today to fix that problem that you had on your 2016 payrolls. You didn't treat a payment correctly as taxable or non-taxable, and therefore you withheld federal income taxes or didn't withhold federal income taxes. You also can't correct that on a 941X now for 2016. Or if you paid federal income tax on behalf of the employee rather than deducting it from the employee's pay, which results additional wages subject to tax. If you did that, then you also can't correct that error by using a 941X. As we said, it's a very limited case. So understand and counsel your clients about the limited cases. 941X has its uses, but it's not really used the same way that something like a 1040X, 1120X would be used to just correct any sort of error. This is a very limited set of situations where the form 941X is useful. Well, don't forget, bringing you this broadcast every week, your state societies of CPAs, and you should go check out your CPE that they have available to you now. Obviously, it's time to take a look, learn. You got a little bit of a breather here before you get to those September 15th, 30th, and 15th due dates, October 15th due dates. Remember, this year, we're going to break those into 3 separate sets. So we actually have a drop dead dates, 3 drop dead dates this year instead of 2 that we normally have for calendar year taxpayers. So you got a little bit of a breather right now here in August. I would suggest might not be a bad time to take a look, here in July and August and get those things going. Check out your state society catalog, your state society website for the courses that are available. This has been the current federal tax developments for the week of July 17th. You can go ahead on our website at currentfederaltaxdevelopments.com. Continue with us. We're going to post things there as things happen in the area of taxes. So if there's something happens during the week, we'll put something there. If eventually we get a health care bill that actually passes both houses, I'll probably write up something with regard to the tax provisions in there. So if that ever happens, we'll be working on that. And I'm always hoping it doesn't happen when I have 3 courses in a row or something to work with. So I have some time to write it, but be looking for that kind of stuff there too. If you have any questions or comments, you can send them to me, Ed Zollars at currentfederaltaxdevelopments.com. You can also follow me on Twitter at Ed Zollars. Well, we're done for another week here in the area of taxes. Be sure to follow along. And by the way, be sure to be back next week and listen to our next update on what's happening in the area of federal taxes.